Henry Fernandez joins us this morning with your baby, MSCI. What was it like the first years of MSCI, where you had to go into every meeting to explain, what are we doing there? Now you own emerging market and global index analysis.
So I created the company 30 years ago on top of the, what was then the Morgan Stanley Capital International indices. And that was the only product we had, right? Market cap indices, and it was a cost center, so we didn't have a lot of resources, and the world wanted a lot from us. Yeah. So we had to, educate a lot of people and expand, and eventually bought a lot of companies and spun out of Morgan Stanley, and it's a $40 billion market cap company today.
You were focused on the innovation here of the countability of data over to the climate challenges we have. How are you going to bring your data acumen over to a better measurement of our climate disaster?
So clearly, climate risk is an existential risk for all of us. But in the capital industry, you can decimate portfolios. There will be winners and losers, and all of them under your portfolio today. So the question is, how are you going to discern who those are, and how are you going to start transitioning to a low carbon portfolio? So it's a lot of it a question of measurement. So what's the nature of your problem? Where is the carbon emissions? Where are the big climate risks? What do you do about it? Where do you start? Do you start in private assets, in public assets? And very importantly, at what pace do you go? If you go too fast, you're going to underperform. And if you
Has Europe gone too fast?
Huh?
Is Europe gone too fast?
No. I mean, nothing in the world is going too fast. For, the Paris Agreement put a date of 2050 because we needed to get 200 countries to agree. But it was so far out that, people think that this is a long-term problem. Of course it is a long-term problem, but it's also a short to medium-term problem. We already see an enormous physical risk around the world.
I mean, you've got a risk in Brooklyn that your house could flood away, right?
Well, thankfully we're not on the bottom floor, but yes.
If the East River gets any bigger,
erode,
there goes the Gura
make
house.
its way up Park Slope. I remember talking to Anne Finucane on her last day at Bank of America about ESG, something about which she's so passionate and has been for so long. And we talked about the issue of standardization, that companies trying to keep up with this kind of data have so many ways in which they're filing or making filings known. Help me understand that, where we are in that process of winning and simplifying data when it comes to ESG and climate issues in particular. Is it still too much of a Wild West than it should be?
No, really there is, first of all, ESG is investment risk and opportunity.
Yes.
It's turned politicized, into political philosophies, but it's about understanding the capital markets and the risk associated with it with additional information, right, in terms of non-financial information, as you know well. Secondly, unfortunately, we call them ratings, and we have a metric system that is similar to credit ratings. Mm-hmm. So a lot of people think that there has to be convergence of the ratings, just like credit ratings have convergence, where credit ratings are unidimensional. It's about cash flows and the stability of the cash flows. So how far can you be between different people, right, in terms of the rating? ESG measures a huge number of various things. So it's almost like a sell-side opinion.
Yes.
So therefore, it's very hard to think that you're going to end up with, standardization of the ratings. Because, my opinion at MSCI may be different than our competitors' opinion. They may think that governance is more important. We may think that climate is more important. The key is not on the ratings. The key is to make sure the quality of the data.
Henry Fernandez with us with MSCI here at the Earthshot Prize, the Plaza Hotel. David?
Let's talk about sort of one area in particular, the sort of voluntary carbon credit market. I know that MSCI has kind of looked at the integrity of that data, rated that data. How representative is that of the work that you're doing when it comes to climate in particular? And what did you find kind of looking at those data in particular?
So first of all, we believe strongly that voluntary carbon markets have to be part of the process of the risk in the portfolios of the world and the world itself. Every place else we go, markets serve a function of transferring value and transferring risk. And in climate, we're going to say they don't play any function. It's crazy to think that they won't. The issue is, how do we build integrity and understanding that what you buy is what you thought you were buying and all of that. So we have come up with ratings. We have 4,000 projects right now that we're rating. We just announced that last week. and we're going to bring more integrity, more data, and quality.
How do you rating something in Chengdu, China? Explain to me the data veracity we can bring to the distrust around what China's doing in carbon management, in coal management. Are you optimistic that we can get a handle on that?
Well, I was just in Chengdu, China, a couple of months ago to begin with, but importantly...
Did you go see the pandas?
Absolutely.
Good, okay. That's the number one thing we've learned from Fernandez here this morning.
Yeah.
And, but it's not different that how we classify countries, how we classify ESG companies, how we look at carbon. So we collect an enormous amount of data from independent sources, and then we sort of package it into a classification system of the various sources, and then we create the ratings.
For our American audience, coast to coast, thank you this morning for listening and tuning in on YouTube as well. There's a belief here that China's cheating. Does MSCI have the data amount or veracity to say that China is or is not cheating, or any other country for that matter?
Well, I mean, they could be cheating in many different aspects, obviously. But in our case, we have incredible sources of independent data. The global press, the local press sometimes is obviously controlled to find independent sources and verify those sources like a newspaper would, to understand what is the nature of the climate emissions of a company, what is the nature of ESG, what is the nature of, in the west of China and all of that. And it doesn't make us popular in China necessarily, but we have an independent view and an unbiased view, and that's how we rate everything, including in China, right? But it's not different than Indonesia, sometimes not different than Nigeria, not different than Mexico and the like.
A last question here, just given your perspective, having traveled to the bamboo forest in Chengdu and elsewhere, what don't we understand about emerging markets today? Sort of coming out of the pandemic, as we see the world reopening again, what are people misunderstanding or not understanding about sort of the health of?
First of all, emerging market is a catch-all.
Yes.
Right? So you have to then break it down into, commodity exporting markets, consumer markets, and markets that don't have a lot of competitive advantages, right? Secondly, is emerging markets are where the demographics, growth is in the world. They have a lot of problems, obviously. Emerging markets is where the climate problem will be the biggest,
acute,
because they don't have a lot of resources. But they also present significant opportunities, in the world. So there is a little bit of too much of a gloss over, emerging markets that you need to go more in depth into each category and understand Brazil is different than Turkey, different than China. Right?